Well, good afternoon, Maverick traders. It's Joe. It's Monday. It's the 12th of December. Let's get into the last expiration cycle for 2022. Now, that's not true. It's the third Friday of the month, but there still is 2 more weeks in December for you weekly options traders. Guys, I'm going to give you my 2 cents on the markets. I'm going to give you a couple things to think about, but it is opinion. Take responsibility for the outlook. So let's get into the market analysis. And exactly what I expected to happen after Friday's move happened. And what that is this push-pull in the markets is going to continue. We're at a neutral stance, and we're in a pretty decent range. I'm going to draw some lines here on a chart. But right now, let's get into how we finished. The Dow, the S&P, and the NASDAQ up. Down the S&P up about 1.5%. NASDAQ up, what, 1.25%. Russell's up over 1%. Oil had a pretty good bounce, but oil been getting smashed, folks. It was down in the low 70s. And had a pretty decent bounce today. I'm not going to chalk that up to anything past technical. I'll leave it on you guys when it comes to the expectations of a recession and fears moving forward. I'm just going to report what we see. Gold down 1% as well. The sector heat map, we'll get there in a second. But the advanced decline line above and below the moving day average, or the 50-day moving average, is exactly what we expect. Look how interesting this was. So we got this cool little 60-40 thing balancing out as we go to the end of the year. I don't know, maybe I'm looking too much into it. Thought it was fun. We do have the CPI on Tuesday and an FOMC statement following that on Wednesday. This is it. This will be the last, I think, stimulus into the markets for the year. It's pretty easy for me to say since there's only about a week and a half of trading left past that. Now I'm just going to go ahead and give you my 2 cents since this is the end of the day post. There is really no reward or there's no advantage to dumping stocks here. Now, selling all of those high flyers and putting immediately into some bottom fishing or some underperformers that are expected to do better by the end of 2023, sure. Now, this has created a lot of problems for most of you out there. A lot of the traders I've talked to recently said, like, Joe, I'm in 10 positions and all of my bulls are going down and all of my bears are going up. That's exactly this kind of portfolio balancing I'm seeing going into the end of the year, which is creating this consolidation. Now, what we've been talking here at Maverick for the last couple of weeks is sideways, and I can't emphasize that anymore. Sideways, something that's not going to move too high, too low, but it's going to go sideways. This is your condors, your calendar spreads, your slight bullish, slight bearish diagonal spreads. In fact, I don't even really want to give too much of a direction because we are seeing a lot of underperformance in some of those outperformers that we've seen all year. Let's get into the charts, and I'll get a little bit more specific on what I'm talking about. I do believe that Corey made mention of this a couple of weeks ago in the consolidation, and I have to tend to agree 100% because look at this thing. 390 to 400, a little bit of a pop-up. Here we are at the bottom. We're below or just retesting the 20-day moving average. We're above the 50. It's all neutral. Neutral, neutral, neutral. I could draw this all the way back from July, which we had our huge surge to the upside and absolute correction to the downside. And guess what? If you were to go sideways in July and have it expire in December, you're at a maximum gain. It just is gone nowhere. And I don't think that's going to change any time soon. I will add a couple of things to it on the good news side. Just because we're towards the end of the year. Let's move to the Qs here. Qs are showing kind of a similar situation. Let's go back to, it's July. Boy, that's not straight. Let's try it again here. At the 280 mark. So it's got a resistance, though, at about 295. You could see also an area here and here that it hit late July and early September. So this is also range bound. So I believe if there is any sort of reason to trade out there, folks, it's got to be sideways within a range, credit spreads. I don't want to really give anything a slight bull, slight bear. But if we do get a lower CPI and the Fed does take their foot off the gas, we will go higher. Now, if the CPI comes in hot and the Fed says they need to stay hawkish, I don't know how far we go down. I'll be honest with you, folks. I think we do have an initial move to the downside, but I don't think that it's going to be a consistent amount of selling that takes us through the end of the year. I do think it's met with a little bit of bottom fishing. So there you go. So let's move on to the heat map. And you can see that everything participated today. Tesla struggling, down 6.27%. That's its own soap opera if you guys want to follow along with whatever's going there. But when a stock is kind of behaving the way it is there, it's best to just kind of set it aside and leave it alone. So I'm going to stick with an absolute solid 0. There you go. That's it. Below the 20-day moving average, but slight. And it was, that actually could be above now that I look at that chart. So I'm just going to stay neutral for the rest. At least for the rest of this week. I know it's only Monday and the CPI is going to be a big deal. Well, we get to talk on Wednesday, so we'll go from there. Potential trades, nothing on the bull side, nothing even sideways, and or on the bear side really rings a bell. Now, I will move more towards sideways as things go on. I really think if we get through the rest of this week, the CPI number and the Fed announcement, and maybe we get up move and a down move or vice versa, and we finish flat. If I'm going to make a trade between now and the end of the year, it's definitely going to be sideways. But let's take a look at what I have so far. This is steel. Steel's outperforming, but take a look at what it's doing now. It's actually, what? Correcting. And not only is it correcting, but it is at a support level that it was recently at a little while ago, right? Back in the at the highs it set in August and September. Now, I'm not saying that it's going to fall apart. Yeah, sure, we got all the inflationary worries and a slowing economy, things of that nature that could really hurt a commodity like steel. However, it looks like it's kind of trying to establish some sort of a support level just around that 20-day moving average. So I'm not throwing it out saying, hey, go ahead and buy this now, but it's holding in there. It's holding in there. Now I'm going to see if this can maybe turn around and move higher. If the markets do so, this might be something to jump in to the bull side as well. So let's move to sideways. This is gold. Now we know that gold had a little bit of a surge last week, a little bit of corrective action today. Doesn't mean that it's the end of it, but it is also within a range. Look at that, 166 to 168. It's pretty tight. If you wanted to open that up, I would be completely fine with it somewhere around this pivot point from, let me erase this, from its gap, right? So a gap from here to here, its first pivot is its new pivot. So you kind of throw out the past after a gap. Now, you don't really need to, but sometimes I'll just let it go thinking that, okay, after this gap, retracement, it's kind of a new pivot. This is definitely the newest pivot at 64. So we got a range between 168 and 164 if traders are interested in playing some sort of a range bound in gold for the rest of the year. So let's go to NVAX. I like this on the bear side. It hasn't committed to the downside. It doesn't mean that it's not going to, but I just have a hard time believing that anybody that wants to sell these markets is still in the market. But from here on out, my money is sideways to I don't think we do much, but push back and forth, test levels. We see a little rotation. What was weak is being bought into for speculative buying, and maybe some profit taking in some of those higher or outperforming sectors. So moving into our summary, guys, the markets are in consolidation mode. We have a range. It's definitely established. I got a lot of head fakes going on. A lot of traders are trying to do some bull stuff and some bear stuff, and it's just not working out. And the whole reason being is because these markets are just pushing and pulling. I'm seeing some rotation from some of the stronger stocks into some of the speculative weaker stocks, and that could be causing some problems. If you're not going to play if you're not going to play sideways, folks, then don't play. It's best just to sit out and see how the year ends. CPI and the FOMC, tomorrow's the CPI, Wednesday's the Fed statement, that's it. Last thing I saw was Oracle had its earnings. It's currently up about 2%, beat revenue. I'm not sure where that's at. We're kind of dwindling on that side of things, but just always triple check if you're going to make a trade that it doesn't have earnings. But I think the main focus is definitely over the next couple of days, and then after that, that's the end of the year. All right, guys, my 2 cents. Thanks for joining me. We'll talk to you next time. Bye, folks.